PS19 Employee Benefits.
I am Vanessa Grocio Ramos from BSA 1. Today, our topic is all about the PS19, which is the employee benefit. What is employee benefit? Employee benefits are all forms of consideration given by an entity in exchange for service rendered by employees or for the termination of employment. And the employee's benefit can be in any form, example like cash, goods, or services, are also pensioned and may be provided to either the employees or their dependents. And type of employees include either regular, part-time, or casual.
Hi there everyone, good morning. My name is James Mackenzie Lapini from the College of Business Administration with the program of Internal Auditing. I am now reporting about the simplified or the shortened explanation about the measurement of employees' benefits. So there are four. The first one is short-term employees' benefits. The second one is the other long-term employees' benefits. And the third one is post-employment benefits. And the last one is termination benefits. So let me explain something about the first one. So the first one, the short-term employees benefits, these are benefits payable within 12 months. The measurement is straightforward. It's the amount expected to be paid. Alright. So the second one is the other long-term employees benefits. These benefits are payable beyond 12 months. The measurement focuses on the period when employees perform the related some services. This means the employees account for the benefits expense during the period the employees work, not when the payment occurs. So the third one is the post-employment benefits. These are benefits provided after an employee's retirement. The accounting uses the project unit they call the what do you call us that there? The projected unit credited methods, which estimate the benefits obligation based on the employee's services and projected future salary increases. These benefits can be contributory or non-contributory. If you say the contributory, these employees contributes, or if non-contributory, it means the employers pays fully and they can be funded, can be funded. Termination benefits. These are payments when an employee is something that they let it go. The measurement of these benefits is the present value of the expected cash outflows. This accounts for the time value of money, or a peso is worth more than a peso in the future, something like that, the termination of benefits. So that's all. Thank you.
Good day, I am Vincent Villa and I will be reporting about employees' benefits. So, first, let's discuss short-term employee benefits. So it is perks offered to employees for a limited time, usually less than a year. These benefits are designed to attract retain talent, boost morale, and improve employee well-being. They differ from long-term benefits like retirement plans or health insurance, which extend over a long period. Example of this are the bonuses, gift cards, and paid time offs. Those are the short-term benefits that a company can offer. So the next one is the benefits of offering short-term benefits are improve employee, increase employees retention, and enhance company culture. And the last one is improve productivity. So those are the benefits that short-term benefits can have. The next one is the post-employment benefits. Post-employment benefits are payment or services provided by an employer to employee after the employment ends. These benefits are typically offered to reward long-term services and help employees transition into retirement. These are distinct from termination fees, which are paid upon job separation regardless of the reason. Example of is a pension, insurance, and other benefits. So, post-employment can be contributory or uncontributory, funded or unfunded. So, when you say contributory, it is where both employer and the employee contribute financially. A common example is a contributory pension plan, where both parties contribute to employees' retirement fund. The opposite is a non-contributory plan, where only the employee contributes. This only applies to the other benefit plans such as health insurance. So, the second one is the long-term benefit. Long-term benefits typically refers to employee benefits extended beyond a year, including the most commonly discussed categories like pension, health insurance, and life insurance. The specific benefits included depends heavily on the employer and the specific benefit plan. So, the last one is the termination benefits. Termination benefits are payments or services provided to an employee upon the end of their employment, regardless of whether the termination was voluntary or involuntary. These benefits aim to ease the transition for the employee and may be mandated by law, dictated by company policy, or negotiated individually. Example of termination benefits is severance pay, extended insurance, and bonus or commissions. So those are the benefits plan for the employees that was given by a company to its employee. So now, let's proceed to derecognition. What is derecognition? In context of PS9, employee benefits means removing a specific defined benefit plan from the balance sheet. This happens when the entity is no longer obligated to provide those benefits to its employees. So, when does derecognition occur? So, it occurs when it's settlement of obligation, when all the obligations related to a defined benefit plan have been settled, the plan can be derecognized. The second one is transfer obligation. When the obligation under the defined benefit plan are transferred to another party or a new employer or another pension fund, the plan can also be derecognized. So the third one is termination of the plan. If an entity decides to terminate a defined benefit plan, it needs to derecognize the plan from its financial statement. So that's all for the derecognition of the benefits plan of the employer.
Hello, I am Charissa May Martinez, BS Internal Auditing. I will be reporting about the recognition of PS19 employee benefits. So employee benefits recognized as expense when employees have rendered services, except to that extent that the employee benefits form part of the cost of another asset. For example, salaries of factory workers are included in the cost of inventories. So, PS19 International Accounting Standard 19 requires an entity to recognize a liability when an employee has provided service in exchange for employee benefits to be paid in the future. It also requires recognition of an expense when the entity consumes the economic benefits arising from employee service. So this means that if an employer has a legal or constructive obligation to pay employee benefits, they must be recognized in the financial statements. So as Michael provided it reporting about the classification of employee benefits, in summary, PS19 requires an entity to recognize a liability and an expense for employee benefits when an employee has provided service in exchange for those benefits, regardless of whether the payment is expected within 1 year or not. The specific accounting treatment depends on the type of employee benefits and the nature of the plan.